So Bitcoin from a market structure has been incredibly bullish. The pattern now, the chart pattern looks very similar to a smaller version of the one from March to June 2020, where it exploded. We've had this lovely corrective phase. We see all the on-chain stuff, William Clemente, and Willy Woo and all those guys showing that it's all going into good, strong hands. We had the China FUD. We've had a bunch of FUD. This usually, and there's no guarantees, usually October, November, December is ridiculously good, particularly at this point in the halving cycle. So structure, it looks amazing. So, okay, who are the buyers here? So most people who got into crypto came in via Bitcoin. That's always the case. It's the big daddy asset. And then people move out the risk curve, and that's pretty normal. So who's the next big buyer of Bitcoin? It's pretty clear to me who they are. It is the ongoing institutions. I mean, that just keeps going. And I think we'll see an acceleration in that, particularly if the price breaks out, because everybody's like sheep. They always want to follow each other. Secondly, it is the coming ETF. It's definitely going to, definitely, I don't know that, but I just have a very strong feeling it comes in the next, over this October, November, December period. And that will drive a huge amount of money in the space because it allows RIAs to allocate and ordinary individuals in a way that they can easily understand. And finally, I think we're starting to see noise from the sovereign wealth funds. So I know some of them, and I've talked about this before with you, is some of them are already allocated, but I think we're going to start to see more sovereign wealth activity in the space.
When you think about the institutions that are thinking about or talking about Ethereum and Ether, is it because they've already allocated to Bitcoin, or do you see some of them coming in and they're basically actually skipping over Bitcoin?
I think there are some that are skipping over Bitcoin because they get their head around it in a different way, because they think of it as a way of playing the entire technology of the space. So then they don't, it's hard for many of these institutions to stomach the narrative, the Bitcoin narrative of a store of value that central banks are destroying the world and a lot of this stuff, because that kind of goes against a bit of their business model. But Ethereum is not as, it doesn't feel like it's attacking them as much, because it's like, here's a space and we're building decentralized finance on it, and everybody can participate. It doesn't feel that they have to change their internal narratives. So some are finding it just a bit easier to get their heads around what it is without kind of going against or kind of exposing
Ethereum and the Ether asset.
So Ethereum, again, the charts look absolutely astonishing. The on-chain activity, the adoption is by far the largest of anything in the space. So it's huge what's going on. The move towards ETH 2.0 means that, at a simple level, everybody's going to stake everything they've got to get it there. And so that takes all the coins off the market. There's about 11% of all ETH in circulation. So it's almost unbuyable. So you bring a whale into the market, the price just explodes. So I've never really seen a setup as good as this in that respect. So I think it's a very high quality bet for the time being, because of all of this stuff that's either off exchange, being staked, and there's no free supply, and demand keeps going exponential. So I like ETH overall. What's interesting is we're starting to see institutional adoption. So I spoke at Cowen's big event, and it wasn't about Bitcoin. It was solely about Ethereum, which took me by surprise. That's the first one I've done. It's kind of been referenced in other ones, but here I am now speaking to investment banks when they're asking me to come and talk about Ethereum, and just skipping Bitcoin, saying, well, we assume you know Bitcoin, but here's another opportunity. So I think there's a lot more adoption to come in that space. And I think there's going to be an ETF there too. And again, with this really restricted supply that's going on because of ETH 2.0, I think it drives prices a lot. The Wizard of Oz, which is the central banks and what they're doing to currencies overall.
Let's talk about what I'll call Ethereum competitors. Maybe some of them aren't necessarily competitive, they're more complementary, but like the smart contract platform. So this is Polkadot, this is Solana, and there's kind of a whole group of those that are out there. How do you look at those assets?
So all I do is look at adoption effects, because I'm not smart enough to figure out what chain's better than what and why they want to build on it, et cetera, et cetera. But interestingly, as I've mentioned before, Ethereum is exactly following Bitcoin in 2017 in both price and price structure. Bitcoin is following Bitcoin 2013, which is fascinating, in price structure, but not in price itself. And then so I thought, you know what? I bet you Solana is following Ethereum in 2017. If anybody was in that market at that time, Ethereum was the rocket ship that took everybody by surprise. And guess what? It's exact chart fit, and the prices are the same. So Solana is exactly following Ethereum. Ethereum's exactly following Bitcoin. It's like the magic is all in this network adoption, and it kind of all makes sense. The other two that are in that kind of fast growth, fast adoption phase where you see exponential price rises more than anything else is obviously Terra, probably Avalanche, and probably Polkadot. And I think, they will all do well in this cycle. And like Ethereum, they'll all go down a lot later. And then from that, we'll see how it builds out. But it's bizarrely consistent. I never thought this would be the case because you see all the people online, it's like my project. But when you net balance it all out and just apply like adoption effects and do these things look similar, they're almost identical, which is amazing.
One of the things that I've always been surprised by is the folks in Silicon Valley who kind of missed a lot of this. There's plenty of people who didn't miss it, but the people who did, you would think that they would understand it, because what we do know from, let's say, mobile apps or some sort of like social network products, etc., is those network effects look very similar. And so if you can start to understand kind of a K coefficient in the growth and really understand kind of the slopes of those lines or kind of how quickly they're accelerating, you can, with pretty good accuracy, predict here's how many users the company's going to have on this date and this date and this date. And it feels like that's a little bit of what's happening here, right? And there's always the question of, is it sustainable? Will people continue to adopt it and make sure that it's an acceleration of the trend? But it does feel like there is some predictability to some of these assets as long as that network effect takes hold and it kind of takes off.
Yeah, and none of us would have thought this, but it kind of explains why Plan B's model works. Because I think some way it's showing the same thing in a different way with network adoption and how it drives price. And it seems, so consistent that it is pretty forecastable. Now, we don't know how the cycle's going to play out now. What's going to happen in the, in the bear market? When does that come? Does it come in the same structure? I do think it probably decouples to a certain extent because I think the adoption is going to be really quite big. So that lowers, as a network gets more adopted, the volatility lowers. So I think we're going to see that this time around, and it will decouple. I also think the cycle goes on longer just because of two key factors. One is ETH 2.0 will probably be, I think, the end of the cycle, because everybody will, once it unlocks, people will sell some of their ETH that they put in for the staking. I think that's a pretty common thing to do. That happens probably around tax season as well, so people realize gains. And then in addition, I think the ETF will have come out at that point, and a lot of the pent-up demand will be in. And then we'll have to deal with a bunch of people who don't yet realize how to deal with the 70, 80 vol asset. It's, and you've spent a long time doing this, we all have, is to teach people how to hold, how in a network adoption effect model, you will get volatility, but is more than compensated by price if your time horizon is long enough. And we're going to have to teach all of these RIAs this, because they're all going to panic out. So, there's a lot of work for us all to do to get people to understand how to deal with high vol assets and what it means as well, what it could mean if they do hold on.